Let's go to Mary Holm now, our personal finance expert. Hi, Mary.
Hi, Jesse.
And you come with Christmas presents today.
Oh, yes. The publisher of my book and I were just chatting the other day about how my books tend to sell quite well around Christmas time for people to give them to other people, and we decided to make a little competition for people to win some books to give away to family or friends.
Great. So you've got two recent books, A Richer You and Rich Enough. And you got 5 sort of double packs, have you? Like 5 packs with both books inside.
That's right.
Yeah.
And people could give them both to one person or maybe split them up and give them to 2 different people.
Yeah,
we
cool.
find a lot of people buy them for their young adult children, actually. That's what a lot of the books... And then I've had younger adults telling me they buy them for their parents because they need to get their financial act together. So
yeah. You have to be careful not to dent your parents' pride by giving them a book on how to manage their money, I imagine.
Well, it's a way to get a bigger inheritance.
I suppose so, yeah. What are the instructions?
We're asking people to write in 30 words or less, so no more than 30, who they would give the books to if they won them, and why. And we're looking really for people to be clever or funny or moving. They might have, a sad story to tell or an interesting story to tell. Got to be 30 words or less, though. And asking people to email their entries to me. I'm at mary@maryholm.com. Or you could do it via my website if that's easier. That's Mary@maryholm, MARYHOLM.com. And the subject matter to be RNZ books. So I can see when the emails come in, which ones are those, by next Thursday. So by midnight next Thursday, so a week from now.
Fantastic.
And asking people to include their mailing address in there so that if they win the books, we can get them out to them as fast as possible.
Good one. And as someone who often has to judge competitions such as this, can I just encourage people to stick to that 30-word limit? You might think that you've got something really amazing to say in 50 or 60 words, but when you get like a couple of hundred entries, it's just a really easy way to get rid of a whole bunch of them if they haven't followed the rules. So
that's exactly right. Use 31 words and you're out. Yeah.
Thank you, Mary. Thanks for this opportunity for our listeners. And mary@maryholm.com is the email address. Put RNZ books in the subject line, 30 words or less on why or who you'd give the books to and why. And we're talking about tricky mortgages this week.
Yes, yeah. You were asking about them a few sessions back, and I said, look, that's a whole separate session I think we should do on them, because they're a little bit complicated. There are 3 main interesting sorts of mortgages, which are called offset or redrawable, how would you say, or revolving credit. So I thought I'd just go through those 3.
Yeah.
They work really well for some people. It depends a bit on your lifestyle, on how often you get paid, in some cases on whether you've got willpower or not. But basically the basic idea with all of them is that you can, through them, you can pay your loan off faster. And that means, firstly, that you are mortgage-free faster, but just as importantly, you're paying a lot less interest. It makes a big, big difference. If you can get the mortgage out of the way a bit faster, you pay a lot less interest.
Yeah, I saw a calculation today. We all notice how much our weekly payments go up when interest rates go up, but for the first time today, I thought about how much extra I'll pay on the whole house in an era of higher interest rates, right?
Yeah. Yes, there's a much more incentive now than there was a couple of years ago to get those interest payments down. Now, all of these 3, when you think about them, they all involve making use of the everyday sort of money that we have sitting around. Mm-hmm. Money that's come in and then you haven't yet paid your bills, or importantly, rainy day money. If you've got some rainy day money, it's a really good way to use that. Because as we all know when it's sitting in the bank, it's usually earning no interest these days, or if you're lucky, a tiny little bit of interest. So it's a way of making a really good use of all that money that's sitting around. One other point before I just describe the three different ones is that they all are on floating mortgage rates only. So floating interest rates, which currently tend to be higher than fixed rates, although that won't necessarily doesn't always apply. And you know, as interest rates fall, people and they will in due course, we don't know when, but they will, and people on the floating rates get the benefit of that faster. So I don't, you know, it's a pity for people to just say, oh, if it's a floating rate, I don't want to know about it. Another point too, that not all lenders offer all of these types of mortgages, but you might want to move to a bank that does offer them if one of them works particularly well for you.
Great.
So the first one is offset mortgages, and what happens with those is you've got your mortgage just coming out of your bank account, but you get sort of credit for any money you've got sitting around the bank and any other type of bank account. And in some of the banks also let other family members' bank accounts count towards this as well. So what they do is they're having a look at your mortgage balance and how much you owe on the mortgage, but they also look at the balances you've got in all your other accounts, savings accounts, cheque accounts and all of that, and subtract that from the mortgage balance before they calculate the interest you owe. I should say that all of these other accounts are earning no interest as such, but what they're doing is, because you add up all those balances and they're subtracted from the mortgage debt that you owe, and it means that you're paying interest on a lower amount, and that's where the good stuff comes from. It's I worked through one example that I put in my book, Rich Enough, on a $300,000 30-year mortgage at, say, 6%. And so you've got, let's say, a $300,000 mortgage, and let's say the balances in all your other accounts sitting around in the bank, which might include rainy day money, let's say they totaled $5,000. So instead of calculating the interest on $300,000, the bank's calculating the interest on $295,000, which doesn't sound like it's awfully different, but over 30 years, that can amount to you paying $10,800 less in interest.
Wow.
And that's real money. That's, you know, it's not just some kind of theoretical thing on a piece of paper. It's $10,800 more dollars for you to be doing other things with. So that's the kind of value you can get out of these sort of loans. Another type, the second type I've got here, is redrawable. It's which means that you've got a specific account with your mortgage in that your mortgage payments come out of. So you're putting money into that account, and the bank takes the payments out. But at any time, you can put in extra money into that account. It could be a lump sum, just a one-off thing, or it could be you might decide that for a while at least you're going to pay $100 more a month off it, or, you know, in any way you can put extra money into that mortgage account. And as you're doing that, the balance on the account is therefore lower, and the interest therefore is less that you're paying. And at any time you can go back to your original payments if after a while you realise you can't afford to keep up these extra payments, and you can take out any of the extra money you've put in. So now I have sort of mentioned in the past that quite often if people get into financial trouble and they have been putting in extra money onto any mortgage at all, quite often the bank will let them go and borrow some of that back again, but you'd have to apply to do that, etc. Whereas with this, you can just automatically go in and withdraw any of the extra payments you've made over the years. So that's really a kind of rainy day money situation, because you're putting extra in there and then you can grab it back out again at any time if you suddenly find you need it.
And we should say that if people start feeling confused, various of these mortgages share elements in common with others, right? There is some crossover.
Yes. Oh, yes. They're all basically reducing your mortgage balance so that you're paying less interest. If you owe less money, you pay less interest on it. And that's what it amounts to with all of them.
And the balance sort of going up and down in some cases as well, yeah.
That's right. Yes. And this redrawable one, and all of them, it's actually going up and down when I look at it. But you want to just get the balance down as much as you can, when you can. The revolving credit one is when you first get one. I had one of these when I last had a mortgage, and your bank account suddenly has a bank balance of minus, let's say, 300,000. You go, oh, this doesn't feel very comfortable. But you put all your income into that account and pay all your bills out of the account, and it gets to be almost a game. Because the more money you've put into the account, that's reducing that negative balance. It's reducing the loan and reducing the interest paid on it. And on all of these, I think the interest is calculated daily. So even if you just have some extra money for a couple of days and put it in one of these accounts, it reduces your interest payments for a couple of days, and it all adds up over time. So with a revolving credit one, you get into this game where you're getting all your income into that account as fast as possible and paying out of it as slowly as possible, so that you want to set up your power bill and those sort of regular bills coming out on the last day that they're owed, your credit card bill, etc. So you've got as much money sitting in there for as long as possible. And with that revolving credit ones, you can just borrow back up to the maximum limit any time you want to fit anything, including a splurge, a big party or going on a trip or something like that. So you've got to have a bit of self-control if you've got that one. Yeah. Some of the banks actually reduce the loan balance over time. They agree with you at the beginning that they're going to reduce the balance over time, so you can't go too crazy with just borrowing the money back again. But to make this work, over time you've got to be putting more into that account than taking out, so that the balance of the loan is going down. I say to people, to test whether you're the right sort of person to have a revolving credit mortgage, do you pay your credit card off in full each month? And do you spend less than you earn? And if you can answer yes to both of those, then you've probably got the sort of self-discipline to have that kind of account.
Yeah.
But yeah.
Now, if you show up at the bank talking about offset mortgages and revolving credits, will they know what you're talking about?
They certainly should. Not all of them offer all of them, but they should at least know what they are.
Yeah.
And I suggest that people go and talk to a mortgage advisor if they're thinking of doing this. If you're in the middle of a mortgage now and you want to move to one of these sorts of mortgages, you'll probably have to do a full application again, because the bank's going to be sort of reassessing whether you can cope with this other type of mortgage. And you'll probably have to pay some fees to do that. So it's not something you can just flick on. It's something to think about if you're getting a new mortgage, or it is something to, you might want to move to one, especially if you're the type of person that's got a fair bit of money sitting around. Because all of these types of loans, say you're self-employed, you might, get a $10,000 payment coming in and then nothing for a few weeks. And it works really well for people in that situation because the money's sitting around in the meantime, keep getting the balance down on the loans. So it can work really well. Have we got time for that email or not?
I think we're out, Mary. I will. We'll do a bit of an email wrap sometime in the future, because we've been getting a few interesting ones recently. But If
Yeah.
people came in late on that conversation, sometimes it does help to go back and listen to it again. All Mary's conversations are available as podcasts on the RNZ website. And don't forget that book giveaway. If you'd like some copies of her latest books, Rich Enough and A Rich You, to give to a loved one this Christmas, say who you would give it to and why in 30 words or less. Be creative and email it to mary@maryholm.com with the subject RNZ Books by next Thursday at midnight. Mary Holm, thanks so much.
Thanks, Jesse.